Hi everyone, today I'm talking about the 5 stocks that I bought this week. I'm going to show you the stocks I bought, the prices I bought them at, and as well as that, thank you so much for the support recently. The like button has been absolutely demolished, and because of that there's just been so many views, so many likes, so thank you all for that support. It makes such a difference to the channel and the amount of viewers it does bring in, so thank you so much for that. But we'll get stuck into the 5 stocks that I bought. Just to let you know, I am looking at 3 stocks potentially to buy next week, and these 3 stocks are currently stocks that I don't own. So if I do buy them, I'll let you know and I'll make a video about it, and if I don't buy them, I'll reveal what 3 there were and can do like an in-depth video into them 3 stocks, because like I say, I'll be probably putting a lot of research into them, so I'll share that for free with you guys as well. But let's get stuck into the 5 stocks that I bought this week. So number 1 is Wynn Resorts, and I'll be honest, I wasn't really planning on buying this because I thought I've got a lot of exposure to kind of like this leisure industry with Carnival and Disney and the Disney resorts going down, and I don't want to get too many companies that are going to get really crippled with the coronavirus that's going on. But Wynn Resorts just got to interesting prices that I was like, wow, like I fell off the chair like when I saw these prices. I was like, these are crazy prices for Wynn Resorts. They're insane. Like I couldn't really ask for any cheaper than this. Like I was like, this is like stupid prices for Wynn Resorts, and I bought it at $39, which is something that I would not believe only like 3 months ago. Wynn Resorts down at $39 is an insanely low price, so I decided to pick some up, and I think since I've been bought these prices, I think it has gone up a little bit more. And you know what, there's part of me that does wish I bought a little bit more at these sort of prices, because this is nearly at a third of a price of what it was only 3 months ago. So there's a lot of upside with this, and I'll kind of show you how undervalued Wynn Resorts is in a little bit. I'll kind of scan quickly through all these stocks to try and get them all done, and as always, there's like a full video of all these stocks somewhere on my channel. But Wynn Resorts, $39, 65% discount. Like I say, it's a third of the price it was only a few months ago, which is insanely cheap. With this stock, there's going to be a nice dividend. Sure, you know, short term, there's a lot of dividend stocks. There's potential for it to get cut or not pay it for a few quarters. But still, it's got a 7.7% dividend right now. And like I say, at $39, you know, all these stocks, I invest in them to make money. And I look at what they're going to do in 2 to 5 years. And Wynn Resorts for me is like, at these sort of prices, there's a 200% upside from here as a long-term hold for sure, and I'm sure that dividend would come back to a decent yield going forward once this coronavirus has passed. In whatever period we look at, 3 to 6 months, I'm sure I'm going to make money on this company. Now, just to give you an idea of how cheap this is for Wynn Resorts, it wasn't at these prices since July 2009, so we're talking 11 years ago that we're back at prices there. And since July in 2009, which was towards like the end of the last recession really, since then, what we've had in Wynn Resorts is they've built a new property in Boston, which aren't cheap to build. These properties that Wynn build, they ain't cheap hotels, they are fantastic resorts and a lot of money and a great asset. So we've got a Boston resort that's been built since then. And obviously we've got the Wynn Palace as well in Macau, which was a big, massive resort. And there has been a few since like 2009 that got built, but I'm not going to go that far back. But we are at prices pre-Wynn Palace and pre-Boston resort as well. So with them two factored in and how the company is going to recover as soon as the economy recovers, Wynn's a fantastic company. So to be picking this up at $39, I think this is an example of picking up a great company at a cheap price. So I'm really happy to get Wynn Resorts at $39. Second stock is like my least known on this list. I talk about it a little bit on the channel, but not many viewers know about it. It's a company called CBRE Group, which basically is like a real estate agent for companies, like for warehouses and office spaces. And I wasn't planning on getting at this, but it was at $33 and I was like, wow, that's insane price. And this is a company I only held about a year ago. I bought the company, I was up about 25%, and I got to the point where I was like, I'm going to sell out of this one because there's not as much upside. And at the time, the stock market was at all-time highs. And I wanted to kind of take some profit off the table as well. So I sold it out, and now that it's dropped to $33, I was shocked. And once again, another company that I could have probably bought a few more shares of. So this company obviously seeing massive upside, 46% discount right now. It's back at 2007 prices. It normally grows EPS and revenue at about a 6% And it's its lowest P ever, which kind of shows you how cheap this company is. A great company, well managed, great balance sheet. Like I say, I think from $33 I see about 100% upside in this company as well. It's a company that will just carry on churning profit out, because as soon as commercial and office spaces come back up and companies start recovering, you know, the prices just generally increase on them, and it's just easy money for CBRE Group. One of my favourite companies in the sector as well. You know, I have personal experience with this company, and they're a great company. One of the best companies that kind of are in that business, office, warehouse, retail space. So I'm really happy to pick this one up, because I was shocked at these sort of prices, and like I said, I weren't planning on buying it, but it got to that opportunity where I was like, right, I see 100% upside in 2 years basically. So I thought this is quite easy money. So I know the company really well, so I took that opportunity in CBRE Group. Number 3 is Disney, and I don't know if I'll buy any more shares in Disney after this one, but it was kind of at really cheap prices once again. But I feel like I've got enough shares in Disney now. I bought in at $79, which was really low. Like a few months ago when I was, you know, started buying a bit of Disney, I was like, I could only dream of these prices. It's where I wish I've started buying a lot earlier. So to be back at these prices, I was really happy to get back in. And you know what? There's some negatives around this company. You know, we do have the closed parks. We do have the poor film lineup for this year. But Disney, let's just look at it, you know, it's kind of priced now at like it's going to go bust, like all the parks are going to be closed forever. And they're not. You know, we've got to realise Disney has some fantastic brands. We've got these numbers now for the stock are at pre-Disney Plus numbers as well. And when we think about Disney Plus, it's going to be a massive growth potential for Disney over the next kind of 2 to 5 years. And this stock price is going to go up from it. I think Disney Plus is really underrated. I think it could be one of the biggest streaming platforms that is out there. And like I say, I think Disney could spike quite easily. All it needs to do is bring news out of, you know, it's going to be releasing it's going to release its exclusive like Obi-Wan Kenobi on Disney Plus, or you know, something along them sort of lines, and then all of a sudden it'll see a big massive surge. So I see this spiking quite easy. I think, as well as the whole stock market as well, this one should recover pretty quick. And I think when we look at China, I think like they're looking at partially opening China now, because the worst has passed there at the moment, and Disney will sort itself out for sure. And when you think about it, it's at 2014 prices. You get a 2% dividend yield with it. And all these brands that you get with Disney haven't lost these brands. They still have all these brands, and they'll pay off for Disney in the long term. So this is kind of like, for me, a nice little pickup where I kind of see myself holding this for a really long time. And like I say, I think when Disney Plus kicks back in and starts getting into the numbers and the parks open, I see Disney going up to a $200 stock in that 2 to 5 year spectrum. Number 4 is CCL, which obviously is being absolutely killed. Like, there's no way. It's like all the cruise ships have crashed into rocks. It is absolutely bonkers. I mean, it's down at $8. It's priced at bankruptcy prices. You know, when we look at the price now, it's down at 1997 prices for the stock. It is priced at bankruptcy. People are making out that CCL are not going to make it to the end of the month. It's trading at a 2p, a 16% dividend yield, which obviously it's probably going to cut its dividend, you know, fair enough. But 16% dividend yield, and you know, as soon as Carnival gets back to where it is, it's going to carry on paying that dividend yield, and a 2p. Now, the thing that I kind of look at what Carnival doing is cruises in the future. A cruise is going to be happening in the future. I think cruises will happen in the future. I think in a year's time we'll get back to normality, and cruises are going to happen, and the cruise industry is going to carry on growing, and CCL is still going to be there, and they're going to capitalise it. I think when the coronavirus passes, we'll have a surge in cruise bookings as well, because people will be eager to get away from all them kind of like cancelled holidays they've had, and people that haven't been on holiday because they've been waiting for this coronavirus pass. So it should have a surge in bookings as well as soon as this passes in 3 to 6 months time. And it's a safe company, you know. I think it won't struggle to get loans, because it already has loans off, you know, banks, and they don't want to see Carnival go bust, so they're willing to loan them more money. As well as that, it's got 500 million in the balance sheet, which is the best in the cruise industry space as well right now. So, you know, the cruise companies are going to survive, especially this one, I think, and in the long term, the cruise business will return to normal, and it's a massively growing industry, so it'll do well for me. And it's just another stock that I'm adding into, because my average in price and just bringing it down to as low as I can right now, and I picked some more Carnival shares up going forward. And number 5, I won't spend too long on it, is Boeing, and I made a video about it. My last video was totally about Boeing, so I won't cover it too much, but Boeing once again down at $92, which is insane. It's the prices it should have been at 3 months ago, if we're honest. It's had a bit of bad management. It's worried about the order cancellations. We've had the MAX 8 trouble, and the management is the core of all Boeing's problems right now, which is trying to sort out. And the worry is about the orders and the cancellation of orders. But the thing that Boeing has is massive for the US company. There's no doubt about it. The government love Boeing. They will bail them out if need be. They have too much of an impact on GDP growth, and as well as that, the military side of it as well. The US cannot have the main military plane supplier go out of business, so they need them there. So the government will bail them out as well. Banks probably bail them out as well because they already have money. They don't want to lose money, and they know how important Boeing is for the US economy as well. So that will happen. They've also got the new $13 billion loan. They've got $10 billion in cash. Boeing's, it's not going to go bankrupt. And when we look at Boeing, when airplanes get back into a good place and people start flying again, and the developing countries need more planes, and all these new airlines that will need planes going forward, they'll come back to Boeing, because they're not going to go on that waiting list for Airbus, because they know that Boeing, even though the reputation's been damaged, they've only got one competitor, and people aren't going to queue up for Airbus. They're going to come back to Boeing, and Boeing will go back to where it was. And it might take a while, but 2 to 5 years. Boeing's a safe company. The dividend will come back, and Boeing will go back up to being a $300 stock in 2 to 5 years, and I'll make money on it from that way. So Boeing was a nice pickup as well. So guys, those are the 5 stocks I bought this week. I hope you enjoyed them. Hope it gave you some insight on the company. And like I say, I am looking at 3 companies to buy next week. I mean, depending where the stock market goes, if Microsoft and Visa go down, I'll probably be buying shares in them as well. So it depends where the stock market goes, but I'm going to be looking into 3 companies, like I say, this weekend, and we'll see where the stock market goes. It is unpredictable, so I have no idea what's going to happen. But if it does go lower, I'll definitely be buying more shares in my favourite companies. But these are another 3 attractive companies out there that I've not got into yet, and if I do buy any stocks, I will make a video about them as always, and I'll update you guys. And thank you so much for watching and all the support recently. As always, give the video a like, subscribe if you haven't, and I'll see you in the next video.